Hello there, this is James and you're watching Tixee Live. In fact, you're watching Tixee Live watch along of the US Non-Farm Payroll, US average earnings and US unemployment. Before we get started in that, don't forget these little videos are for educational purposes only and no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. So with that out of the way, let's get started. So happy NFP Day, everybody. Happy NFP Day. I used to say that back in the day all the time because I was thinking about this earlier on. A good couple of years ago, the non-farm payroll was probably the biggest financial indicator or financial event every month for the currency market. And I remember a good couple of years ago, we used to get prepared probably about an hour before the announcement. It was this big because the volatility it could cause. So we were there checking the feeds, getting everything prepared, and literally we would count it down by the very second till it came out. And it was all hands to the pump, so to speak. Everybody was involved. It was a really exciting time and a massive movement or a potential mover of the market. Nowadays though, it's a bit lukewarm. Okay, it can sometimes be really eventful, but compared to how it used to be back in the day, it's a little bit more lukewarm now. But it's still incredibly important to monitor. And I think today it might show a little bit of its old self like it used to be a couple of days ago, because I think the market is watching this pretty closely, and I'll tell you the reasons why that is. But before I get into that, for those traders out there who are fairly new to trading, I thought I'd give you a little breakdown of why this is incredibly important data coming out today. We understand US unemployment. Obviously, if unemployment is high, it's bad for economy. If unemployment is low, it's good for the economy. But what is NFP and why is that important? And what is average earnings and why is that important? So in a nutshell, okay, the non-farm payroll is a key, or NFP, is a key economic indicator for the United States economy, okay? It represents the number of new jobs added, not including farm workers, hence the name non-farm payroll. It's a very imaginative title, I know. It's released monthly, and the NFP is important data as it gives a very good indication of the current state of the US economy. And as well as that, and this is why I think this today might be quite a big event, well, potentially a big event. The Federal Reserve Bank closely monitors the NFP number as it can influence their decision on monetary policy. And I'll explain to you a little bit more why I think the Fed's going to be watching this really closely and why the market is going to be looking at the Fed's reaction. Average earnings. What is average earnings? Okay. The average earnings is released by the US Bureau of Labor Statistics, and it is a key indicator of labor costs, inflation, and the health of the labor market. And basically, if salaries are increasing, people are more expensive to be paid, so their salaries increasing. The Federal Reserve, now this is the thing, the Federal Reserve pays close attention to the number when it comes to their decision on interest rates. That's the thing. That's the thing there. Because I have a feeling the market will be watching average earnings more closely than NFP. Okay, and I'll explain to you why. So yeah, that line again, the Federal Reserve pays close attention to this number when it comes to their decision on interest rates. A higher than expected reading could be positive for the US dollar, while a lower than expected reading could weaken the US dollar. That's the theory. So that's what these two things are about. So this is why I think it's extremely important. As we know, NFP is expected to come in at 320. US average earnings is supposed to be expected around 0.4%, which is up from last month when it was 0.3%. And US unemployment is expected to come in at 3.5%, which is lower than it was last month when it was 3.6%. So that's the expectations. However, don't forget yesterday, the ADP payroll or ADP employment change was very disappointing yesterday. It came in, announced at 128,000 versus 300,000 expected. Some people, I'm saying some people, some analysts look at ADP as an early warning to what the NFP number could be. I think it's a very poor foreshadowing of the NFP because I've never seen them closely linked. So don't forget, when that came out, the market got quite bullish. The dollar suffered quite dramatically. Those who joined me this morning, my morning session, you could see that what the impact was. However, Goldman Sachs, so we're expecting 320. Goldman Sachs, however, they expect a lower NFP number. They expect a number to come in at 225. But what do other banks think? Well, Commerzbank, okay, this is what they think. 300,000 is their number. They comment, see job growth slowing down, okay? Westpac, 370, momentum slowing, but still robust job market. SocGen or Société Générale, whatever you want to call them, they've got an interesting number. They came in at 440,000. They're saying strong hiring in retail sales. So they're expecting a higher than anticipated number. Deutsche Bank just said 325, no comment. Wells Fargo, 325, but pace of job growth is cooling. Citibank, finally, they came in with 315, which is the lowest of all the expectations. And they said job gains are slowing, which they do have a slight point in. Because don't forget, May NFP, 428, April NFP, 431, March NFP, 678, and February, 467. So if we do get a number like 320 or lower, then indeed there's an indication that the job market is slowing down. So what are the possible outcomes? Okay, well, the theory, let me have a quick swig of water. My throat gets so dry, I do apologize. Now, possible outcomes. Now, usually the theory goes better than expected. You could potentially see a stronger dollar. Weaker than expected or lower than expected, you could see a weaker dollar. However, if that were to happen, you could see the market react in a different way. You could see risk appetite. So the dollar won't benefit so much because it's safe haven. So you can see stocks going up and you can see maybe cable, sort of the pound sterling and the euro benefiting. However, there is a different potential outcome. And that is good news is, I've done a typo there. Whoops, my mistake. Good news is bad news and bad news is good news. What do I mean by that? If it comes in as good news, so higher than expected, the market may look at it and go, right, the Fed's going to increase interest rates. And that might scare the market. So we might see a bearish move in the market. If it's bad news, is good news. If it comes out worse, they might think, the Fed's not going to pull the trigger on interest rates. They're not going to pull the trigger on interest rates. They're going to hold back. So their market could be bullish. I saw yesterday with the ADP. ADP came in, but the US dollar was weaker, and we had a slight bull run on a number of different assets. So we could see that. So good news is bad news is good news. So that could be another potential outcome. As well as that, don't forget, okay, that sometimes the market doesn't react straight away. Sometimes the market takes its time to digress or take in the information and then decide on a direction. But anyway, so we're about 30 seconds away. So let's get ready. Is the pound sterling, the euro dollar, gold. Obviously, those people who know me, they know I'm a gold bug, and the US dollar, Swiss franc. So let's get ready for this. It should be coming out within 12 seconds. I've got my trusted phone, so I can get the information as soon as I can. Let's see what happens. Hope everybody's having a good day, by the way. So let's see. Let's see indeed if good news is bad news and bad news is good news. Right, come on. Let's have a look. Like a drum roll. No massive movements in the market at the moment. Okay. Right. Okie dokie. Average earnings comes in lower than expected, 0.3. Non-farm payroll comes in better than expected at 390. Unemployment comes in at 3.6, so worse than expected. worse than expected. But yeah, the only thing that NFP was better. NFP can't, yeah, so NFP was higher than expected, 390, opposed to the expectation of 320. So maybe Social General has something to do with that. Maybe they were right about the retail sales, etc. Average earnings came in lower than expected at 0.3, opposed to 0.4. And unemployment came in lower than expected, again, at 3.6, or sorry, higher than expected at 3.6, as opposed to 3.5. So yes. So one higher, two lower. Let's see if we've seen any movement in the market. See if good news is bad news. Let's have a look. So let's have a look at the K-Wall. No, let's look at gold first. Gold first, because I've been watching gold all day, and it's been challenging that key level of $1,864. And it's still trading there. As you can see, it spiked downwards. Okay, it spiked downwards initially, touched 1,860. So obviously the market is still digesting this information, what it means. Worst earnings, better NFP, worst unemployment. So yeah, it's still hovering around that level. So a little bit of action on that. Maybe, like I say, if the market goes to risk appetite, or it could go to weak dollar, gold could get a boost. Or alternatively, if gold is a safe haven, don't forget, if the market gets a little bit too nervous, it could start, gets a bit optimistic that the Fed won't pull the trigger because of the average earnings and worse unemployment, we could see that change. Let's have a quick look at the cable. Okay, the cable, this is on a 1 hour. It was challenging that number of 125.73. It has been challenging for a bit. It's since dropped on the back of this data, and it's challenging now a key potential support at 125.49. So we've seen a slight US dollar strength against it at the moment, but it doesn't mean that it's going to stay this way, because don't forget the markets do fates. Euro dollar. Let's see how the euro dollar is. Okay, euro dollar lukewarm again, slightly lukewarm response. It did spike down initially at 1.0775. Currently trading now at 107.38. So it's spiked down a bit, but then spiked up on the back of it. So I definitely think the market is waiting to digest what this all means. Finally, let's look at the dollar Swiss franc, because the dollar has been against the Swiss franc a fair bit. It's stressed strength against it. Okay, as you can see, the Swiss has been quite strong against the dollar over the last couple of trading sessions. This is on a 4-hour chart. If we look at a 1 hour, so we can see a bit more. So we'll look at 30 minutes actually, so we can catch and take it in. Yeah, okay. Yes, we've seen dollar strength against it. So dollar's recovered on the back of obviously that NFP number. Currently trading at 0.9608. So yes, a bit of a muted response for the time being. But like I said, it's all about how the market is going to digest what this means. Are they going to look at it as bad news, is good news because of the average earnings and the lower unemployment? Or are they going to see it as, okay, forget that, look at NFP, this is good news, so it's bad news, so that means the Fed is going to pull the trigger. So let's give it a little while to actually digest what all this means. Okie dokie. Is there any questions at all? Oh, well, okay, good question. I've just seen that. What do you see gold doing with a positive outcome? Very good question, actually. Very good question. Very, very good question. Thank you for this. Well, like I say, we've seen what gold does, but I can tell you, like I say, the two different outcomes what could happen as the market digests this. Okay, because we look at gold again. Okay, we look at gold again. It's still challenging that 1,864 level. So though it did spike down initially, and it is slightly under it, it's still digesting this information. Now, if the market sees this as bad news, okay, then the gold could actually start doing a rally again, like they did with the ADP. Okay, so if it can break past 1,864, some analysts believe it could go to 1,900. Okay. However, if they see it as good news, okay, it might lose its safe haven status. So it might start seeing a sell-off on it. At the moment, we're hovering around that level of 1,864. So let's see how the market digests this. But thank you for the question. That's a brilliant question. Thank you. Okay. So that's the news. One positive, higher NFP. Two very disappointing. I really think it's the average earnings. is going to how the market's going to focus on now, because like I say, that is a major influencer of Fed decisions for interest rates. So the Fed will look at it and we'll wonder if it's the right time to increase interest rates. So let's have a look how that market digests it. Do not forget, okay? I will be going live again a little bit later than normal, okay? Usually I go on at 1 p.m. UTC for the afternoon session. However, because of the watch along, I need to digest as well what the market's impact on this on the market. And plus we give a bit of time to see how the market's thinking. So I'll probably go back online. Okay, I'll do a slightly later show today at 1:15 p.m. UTC. So I hope to see you then. So please come and join me for that session. And that gentleman there, thank you once again for that fantastic question. Right, on that note, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be treated as advice. I do suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till later, or in fact, maybe 30 minutes, every single one of you, trade safe.